Carl Manager is our program tonight. Carl is a resident of, are you Walton or Okaloosa? You're in Okaloosa.
Okaloosa County.
Okaloosa. He puts out a 300,000, is it a blog?
Yeah, it's a blog, about 300,000 circulation a month.
300,000 circulation on economics. And he can probably tell you more about that. Because all I know is he's given us a program before, he did a good job of it, and he's here again. Please welcome Carl.
Well, thank you.
You want that light off?
No, actually that's fine. It's on because that way the camera will probably figure out that it ought to shoot me as well as the screen.
Okay.
I thought the title was appropriate given what happened on Tuesday, since we all know that it was bad enough the last 4 years. Well, here it comes. And so what I want to focus on is two things. First off, exactly how we ended up here. And then I also want to try to put out an overview for what I think we all need to be thinking about over the next 4 years as to how to survive this, not just economically, but from a personal perspective as well. This chart, if you saw my previous presentation or you've read my work on the market ticker, you've seen it before. This is, the green bar is gross domestic product. That's all of the output of our economy. And that really nasty looking orangish reddish thing on top is the amount of debt that's in the system. This is just from 1980 on forward. And you can see how those two things spread out. The important thing to realize about this is that when you put extra debt into the economy, since gross domestic product is denominated in dollars, and you hear this every 3 months on CNBC, they come out and they tell you what the GDP was. Well, if you remember back to your math class in junior high and high school, first rule of algebra is you have to isolate a variable. Otherwise you end up with a ratio. And so what these people are doing is lying. And this has been the agenda of the mainstream media and mainstream economists for the last 30 years. Instead of actually having economic progress, what we've done is borrowed it. And anyone that has ever gotten in trouble with a credit card knows how that ends up working out in the end. So we have been charging up that credit card for 30 years, and now things have changed. This is the key point. From 1953 to 1983, economic growth was about 5.3% every year. Then from 1983 to 2000, it was negative 4.31. And that's when you look at things at an adjusted level, taking the debt back out. So you say, well, my God, you mean we haven't really had any economic growth? And the answer is that's correct. And in 2007, we hit the wall. We all know about it. Lehman Brothers blew up in 2008. We had a subprime crisis. The entire world came apart. What happened in the 1990s and the 2000s is that we fraudulently created growth by adding to debt throughout the system. You took it on, everybody else took it on, and that all blew up in 2007 through 2009. And what has occurred from that point onward is an attempt to cover up what had been done over the last 30 years. So the last 4 years, and the last year of Bush's presidency, and this is important to remember, this is a bipartisan problem, is that we have continued to try to lie to ourselves instead of facing what has gone on in the economy. So average GDP expansion from 1990 to 2000 was 5.49%. That's not a bad number, except debt went up by 7.11% during the same period of time, each and every year. So that means the real growth in the economy was about negative 1.5. Average GDP expansion from 2000 to 2010 was 4.13, but debt went up 8.02. You can see where the problem is here. We're charging up the credit card. Now, this is what is important to realize about this. From 2010 to 2012, second quarter, which is the latest numbers we have at this point, GDP was up 3.93. Yes, believe it or not, even though we had a so-called recession. Wait a minute, that's not possible, right? Well, guess what? That's the number. But debt was up 0.94. That's a shift in the paradigm. What we've done over the last 30 years has changed. It didn't change because we wanted it to change. It didn't change because the government or the people said, we'd like to change how we do things. It changed because you couldn't borrow to buy a house without having any kind of a job or any ability to pay anymore. It was forced upon us. This is very important because when paradigms shift, everything changes in the economy. When the way you were running your economy shifts, so do the outcomes. It may take a little while, but you're inevitably going to see the changes show up in the economy itself. Yes?
You're talking about private debt there, not public debt.
No, I'm talking about everything.
Oh, everything.
This is the entire paradigm. The Fed Z1 comes out 4 times a year, and it separates all the different areas of debt, private and public. And so you can analyze it on a slice-by-slice basis and see where it's all coming from. So this is gross domestic product as reported, which is the dark blue line. The light blue line is our nominal reported GDP. And then we have federal deficits. And this is, ladies and gentlemen, what went haywire during Obama's first term. Well, in order to adjust for what has gone on from a federal government perspective, you have to subtract this from this in order to get the actual economic output of the country. And when you do that, you see that as we came into 2000 with George Bush, we never actually saw economic output go over 2% again. Not during any of that time that we supposedly had this roaring economy in the 2000s. And the last 4 years, well, there they are, folks, all negative, including last year. We don't yet have, of course, 2012 because there's 2 months left. But at the run rate that we have right now for both government debt and GDP numbers, my expectation is that that dot is going to be about right there. So in about 2.5 months, I'll be able to tell you exactly where that is. But it's going to be negative, again, about 4% in real terms. Everybody says the job market stinks, median incomes are going down, nobody's getting ahead. This is why. This is what's really going on. So you say, well, median incomes aren't going up, but guess what? Gas prices have doubled. You know, that's a problem. Well, this is what you're actually seeing in your daily life. So let's talk about the truth. Things have been going up, right? Gee, we had an economy that's recovered. This is what we keep hearing from Barack Obama and the Democrats and everybody else. We have a recovery. You hear it every day. CNBC, turn it on. Then how come food stamp recipients have increased by 52.7% since 2008 and has never gone down? Do you see any decline anywhere in that chart? That number's current. And oh, by the way, the USDA was so kind. Normally they release this number the first day of the month. They didn't release the last month's data until the day after the election. That wasn't intentional, was it? By the way, it was the largest monthly gain in something like the last 17 years or something like this. I mean, it was a ridiculous gain. You see the little, you look over here on the end, you can see that little uptick there. That's the last month's report that just came out. So, but if the economy is recovering and things have gotten better from the bottom, 2009, the early part of 2010, how come we keep adding more and more people to food stamps? That doesn't make any sense. Or maybe it's employment. You know, we keep hearing, we created 7 million jobs, right? You've heard the statistic. They come on, the bubble heads come on TV, tell you this all the time. That's true. That's true. But we also added 7.15 million working age people to the economy during the same period of time. So we had this grand net gain of 50,000 jobs from the bottom, which by the way was January 2010. Since that time, we've added a grand total of 50,000 jobs throughout everywhere in the economy once you adjust back out the number of people who came into the workforce. So there has been no employment growth. And this is the employment rate of the population. This is the only statistic you should ever look at when they come out with the employment report on the first Friday of every month. It's the only number that matters. The reason is only employed people pay taxes. It's pretty basic. If you want the government to provide you services, people have to be working because unemployed people don't pay any taxes. They don't pay taxes with. As you can see, we never really got a recovery after 2000. This is the 2000 tech wreck. Our employment rate never went back up where it was before that happened, and it has never moved off the floor. So we continue to step down, and there has been no recovery from an employment perspective, And you also see that in food stamps. Here's a chart nobody wants to talk about. This, by the way, is why Mitt Romney lost the election, because he didn't want to talk about this chart. This is all of the different things we spend money on in the federal government. This is fiscal year that just finished. And this is the taxes we take in, and that's how much was put on the credit card. I lined them up in a specific order because we have to pay the interest. We have to pay the light bill for the Capitol. You got to have lights in the Capitol. How are you supposed to pass any laws if you don't have any lights? And you have to have the FBI and the cops at the federal level because, hey, guess what? There really are bad people, and we do need to put some of them in jail. So you do have to have that service. So those are these three little boxes down here. And when somebody tells you that they can manage to do great things by getting all the fraud, waste, and abuse out of the general government and the FBI and the Patriot Act and everything else, you can look at them and say, that little slice right there ain't going to make a hill of beans worth of difference when it comes to the outcomes. So where's the rest of the money go? Well, this right here, ladies and gentlemen, is health care. That's Medicare and Medicaid. Okay, those two programs. That's what that nice little red bar is. And then right here we got pensions. We all know what that one is. That's called Social Security. Okay, that is pensions. And then we run out of money halfway through buying defense. We spend about $750 billion a year on defense. And if we stop spending when we stop taking in tax money, we run out about $350 billion into that. And then we don't buy any welfare, any other spending, no education, no transportation. All those departments go in the trash can because we have no money left. Well, most of the stuff up here, I think pretty much everybody in this room would agree we probably ought to get rid of the majority of. Now, how many of you would like to see the DOD cut in half? Because that is exactly what this says you have to do. All right, so the political reality is that in August of 2011, we had the debt threat, right? This was the raise on the debt ceiling that we had to have. The Republicans said no, the Democrats said yes. We had a near shutdown, a near default, and we got the super committee and the so-called sequester. Well, 16 months have gone by, ladies and gentlemen, and where is the actual budgetary movement on either side that would lead to a resolution of this? We now are facing, in about a month and a half, the fact that there are going to be automatic cuts in the budget unless there's some kind of a deal made. Well, guess what? The Republican Party is the one that controls the House of Representatives. Where are the bills? Yeah, I know Harry Reid won't bring a lot of stuff up, but you first have to pass things. And if the Republicans want to stand on principles, can somebody tell me why they keep passing continuing resolutions? They keep funding the government, they keep borrowing more and more money, even though they can't get something through the other side. Why doesn't somebody, hello, John Boehner, stand up and say, no deal, we're going to turn the lights off and go home. And when you're willing to negotiate, we'll come back. Until then, we're going home. But that means everything stop. Yes, it does. We'll see whether or not Harry Reid likes that idea. All right, my suspicion is they'd fold like a cheap suit. But that means you actually have to have some principles. So we have the super committee failure, and you have to ask yourself, why didn't they do this? Why didn't Boehner stand up and do this? Why didn't the House Republican caucus do this? The answer is this chart. This is federal medical spending, Medicare and Medicaid. $53 billion in 1980 to $850 billion last year. This is the chart that nobody will discuss. This is why we're in trouble. This is the entire problem right here. Compound annual growth rate of 9.05%. Why is this a problem? Because by 2019, taxes, assuming that interest rates don't go up. Remember, the Federal Reserve has said interest rates are never going to go up again. Yeah, right, like they really control that. And assuming we don't raise taxes, in other words, no revenue goes up anywhere, we will pay only for these things down here, again, interest, light bill, the police, Medicare and Medicaid, and half of Social Security. Now, how many in this room get Social Security? Guess what? Your check's going to get cut 50% by 2019. And oh, by the way, defense, zero. No defense. No fighter planes, no ships, no soldiers, no nuclear weapons, no nothing. And all the other stuff too, by the way, goes away. This is the reality that we are looking at right now in the budget. This is why the Republican Party won't move on it, because they know this is where it's going. And you just thought that was bad because you didn't get to this slide yet. How many people in this room went to a Tea Party event where Jeff Miller and Steve Sutherland, or both, were present, and they told you if you were 50 or older, your Medicare was not going to get touched? How many people heard that in the last 4 years? Pretty much everyone in this room, I'm sure, at some level. This is what they promised you. We are here. $850 billion a year in federal medical spending. If you are 50 years of age, you are here. 35 years from now, you will be 85, which is what all the insurance company actuarials tell you is about the age at which you will die. And before you get there, we are going to try to spend $16 trillion per year by the federal government in order to give you the benefits that you were told you were going to get. That, by the way, is larger than the size of the entire economy is right now. And if you believe that, I've got a bridge. It's in Brooklyn, and it's got a little sand damage. Yeah, that works, doesn't it? We have to fix the medical system, not Medicare and Medicaid. There is no solution to Medicare and Medicaid that can be found. It's impossible, because the problem lies within the medical system, not within the entitlements. And Obamacare, according to John Bonner, I heard this the other day, it's the law of the land. Yeah, that kind of made my head explode, but you know, there's just no leadership. And the reason there's no leadership is because of these charts and these mathematical realities. They know these are the facts. So let's talk about the election itself. Romney got 0 votes in 59 Philadelphia divisions. That sounds like fraud, right? Guess what? In one example division, and I looked this up, I actually verified this myself because I didn't believe it when I first heard these numbers. There were 12 registered Republicans, and a local paper went and tried to find them, couldn't find one of them. How many votes does a white Republican get from a division that is 100% black and has 0 registered Republicans in it that are actually physically living there? By the way, in 2008, McCain got 0 votes in 57 Philadelphia divisions. All right, first bad piece of news. Second one is all elections have some incidence of fraud. This is just reality. There are people that vote twice. Chicago's known for it. Vote early and often. The only question you care about is did it change the outcome. That's all that matters. Okay? Yes, all fraud is wrong. Yes, anyone who commits it should go to prison. But in terms of what actually happened on Tuesday, the only question you have to ask yourself is, did it change the actual electoral vote count? Because if the answer is no, yes, it's all bad, but it didn't make a difference. And the answer in this election is it did not change the outcome. I've gone and done the analysis on this. The reality is political consultants lie to the campaigns all the time. Why? Because if they start telling them the truth, that their candidate is going to lose, they don't get any more money. And so you had political consultants running around telling Romney he was competitive in Pennsylvania, which was a crock. It was always a crock. He blew money, time, and effort there. He had no chance to win in Pennsylvania. And at the end of the day, the bottom line was turnout, folks. All right. So this is reality. This is what we're dealing with now for the next 4 years, because we're stuck with Obama, whether we like it or not. And by the way, I'd love to see the guy impeached, okay? But remember, the Senate has to vote to convict. That isn't going to happen. You've got a majority of Democrats in the Senate, all right? So you could possibly get the House to file an impeachment, but it wouldn't do you a bit of good. Remember, they did that with Clinton, and they couldn't get enough votes to make a difference. So let's look at Okaloosa County, because this is where we are. Most voters are asleep. They simply vote party line. These are the results of both the presidential race and also the 1st Congressional District. It's very interesting. What percentage of the people are awake and paying attention? It's 1 in 20. The most important piece of information on this table is right here. Jim Bryan, the Democrat candidate for 1st District, ran a literal $500 campaign. He had fewer than 100 signs up throughout the entire district. By the way, the district runs all the way out to Panama City, okay, from the border all the way across. And you couldn't read his name on a couple of them down on 98, and all you could see is the fact that there was a Purple Heart on the sign. That was it. It was all you could make out from the street. People showed up at the polls and they voted for him because they were Democrats. They didn't even know who he was. The other interesting thing is that Kalen Fretz, in the interest of full disclosure, I was treasurer for his campaign, got 5 times the number of votes on a percentage basis as did Gary Johnson, the Libertarian presidential candidate. Now, what does that tell you about the quality of the candidate that the Libertarians ran for President of the United States when our local race, we managed to pull 5 times the number of votes? Well, it tells you what I need to know. But again, notice what happened here. Mitt Romney in Okaloosa County got 73% of the vote. So for those people who say that when you had a Democrat turnout of 75 or 80% is impossible, no, it's not. And actually, if you go over to Henry County, it was like 86 for Mitt Romney. I don't think you could find a Democrat over there. You could fire artillery down the main streets and you wouldn't get anybody. So, what are we going to do here? As the parties currently stand, you don't have a choice. You either change the machinery or you give up on what's there. Those are the choices. Okay, for 40 years, the existing parties have blown smoke up your tail, ignoring the financial realities. Everybody loves to play guns, gays, and God, but I got to tell you something. People vote blindly. You can see it in the numbers. Right? How's Jim Bryan get 20% of the vote? Nobody knows who he is. Well, simply because people go. And unfortunately, Romney was all you needed to know about this. I was not a Romney fan, and I will tell you, this is a so-called conservative that banned guns in Massachusetts. He was the pattern for Obamacare in Massachusetts. Okay? And on top of that, he refused to clamp down on any of the fraud within the banking system. Not only did he refuse to clamp down on it, he was a participant in the leverage games when he was running Bain. Now granted, he walked away from that and did other things. But why does the Republican Party run a guy does this after 3 million people just got thrown out of their house for foreclosure because people were making fraudulent loans? So, if the Republican Party is going to be relevant in elections, it has to stop running candidates like Mitt Romney. So, as a voter, I can only vote for people that are on the ballot. As a party member, we're all responsible for the people that end up on the ballot. Because party members are the people that make the candidates end up on the ballot. Okay? By the way, that includes me. I failed as well. So this is, if you're going to do soul searching about what happened on Tuesday, this is where you start. We all have to take a very serious look at what sort of level of activity we're willing to have, what we're willing to tolerate as candidates, what we're not willing to tolerate as candidates, and we need to make the parties accountable to us, because we the people are the reason they exist. And if we can't get that within the existing machinery, we need to start thinking about setting up another one. When you're staring down the figurative or literal barrel of a gun, all the social issues aren't going to make a bit of difference. If you've got no job, no food in the pantry, and no money, all that stuff doesn't matter so much. So we either get first principles out in front, or we direct political energy where we can actually make changes, and that means local, state, and some federal races such as the House of Representatives. Because at the end of the day, at the federal level, the House of Representatives is the most important place. Why? Because every single spending bill has to originate there. So if we cannot get presidential candidates and presidential representation that we like, the place that we ought to be looking is in the local races, that is in the county commissions. We ought to be looking at the state races, and we ought to be looking at the House, because that is where we can make the biggest difference. The bottom line is you only have a limited amount of energy and resource. If you waste it, you go nowhere. And the mathematical realities are that we just don't have the luxury of wasting these resources anymore. We're out of time. So spend political energy where you think you can move the needle. That's what it comes down to. All right, I know there's a lot of disillusioned people here tonight. Guess what? I'm one of them. But the results that we got in this election have focused my resolve and have caused me to already institute some changes, and there will be more in terms of what I do politically. And I hope it also drives people in this room to do the same. Okay, personally, now we're going to shift gears a little bit. You saw the chart on healthcare. If you don't understand that that means the government's going to stop providing it in the next 5 to 10 years, you weren't paying attention. It's going to go away completely. I know nobody wants to hear that. That's the truth. If you think Obamacare and the rationing that he was talking about in that bill is bad, multiply by 10, because that's what the fiscal realities are going to shove down the federal government's throat. So, get in shape now, not tomorrow. You have to assume that the medical system is going to continue to suck the life out of the economy right up until the point that it folds on itself and collapses, and the government is going to help it along. We've got 40 years of history that says this is what they're going to do, and there's no reason to believe it's going to change. At best, you'll be bankrupted if you're dependent on it when it all comes apart. At worst, you'll be dead. So don't be there. Socially, who are your real friends? I'm not talking about people you play cards with, people you go have a drink with on the corner. Who are your real friends? Time to put some thought into this. We are lucky in this area. We are not going to see the kind of problems that are going to beset some of the larger cities in this country as this all comes apart. Remember that in large parts of this nation, 50, 60, 70% of the population is receiving a check in some form or fashion from the federal government. It has already been announced. Food stamp benefits in the state of Ohio are going down by $50 a month for everybody as of January 1st. That's the start of the squeeze. That is not going to be the last squeeze. We'll be okay here. It will not be okay in some of the larger population centers. You don't think that the cost of meat, cheese, milk, everything else is actually going to go down, right? That hasn't been happening either. The bad news is you're going to become a lot more lonely. The good news, the people that are truly close to you, that you truly can trust, will be the ones who put things back together. And there will be a tomorrow. The sun will come up. It will get warm sometime in March or April of this coming year. And the sun will rise again on America. We just have to try to make sure it doesn't look terribly differently before that happens. All right, economically, at a macro level, the pattern has shifted over the last 30 years. What you've seen over the last 30 years is the United States stock market has gone up almost 14 times from the 1980s to today. The Dow Jones Industrial Average was about 1,000 back then. It is right around 13, 14,000 now. The S&P is trading 1360, 1370 today. Was trading a little over 100 in the early 1980s. Guess what? All of this is going to change. When you change paradigms, money shifts, both flows and levels. Money always goes where it earns the best return. And now that the expansion of this kind of Ponzi finance has come to an end, you're going to see major changes take place in the investment landscape. Taxes are going up. I don't care how they resolve the fiscal cliff debate, taxes are going up. The real problem is that you can't solve the issues that we have by raising taxes, especially not raising taxes on the rich. By the way, if they were to just take, Obama said, taxes on everybody who makes over $250,000 have to go back to where Bush had them. Right? This is what we've heard. Okay? Do you know that that would only raise about $50 billion? We have a $1,200 billion deficit. It means absolutely nothing. So if you're a middle class person and you're sitting in this room and you think your taxes aren't going up, oh yes they are, a lot. All right, so that's just the way the reality works from a mathematics perspective. And again, neither one of the political parties is telling you the truth. We have no more of this false growth. It has ceased. We now have to rely on productivity improvements, and that means technology, it means human ingenuity. But the games we've played with debt leverage are over. From an employment perspective, figure out how you're going to get by if your current job is severely cut back or you lose it entirely. I'm talking about 50% or more. This is already starting. The Obamacare mess has meant that many lower wage job opportunities are being cut back to part-time, under 30 hours a week. This has already been announced by Darden Restaurants. It will be coming from many more people because that is the threshold where people have to provide health insurance. Now you think that's bad enough because that's a 25% reduction in your gross paycheck, right? You go from 40 hours to 30 hours, it's 25%. Oh no, it's much worse because you also now have to, on a mandatory basis, buy your own health insurance, which might cost you $600-700 a month, maybe $1,000. You're going to get that after you get cut back to 30 hours a week at $7 an hour. And how'd you say you were going to pay the rent again? All right, so this is something to pay very close attention to. You need at least 1 year of liquid financial assets to cover yourself if you lose your source of income and you need it right now. The financial planners will tell you need 3 to 6 months. They're wrong. You need at least a year. 2 is better. But 1 is an absolute minimum. And what are you good at? Figure it out. Everybody's good at something. Everybody in this room has skills. They're all different. Someone here may be able to run a CNC machine, make aircraft parts if they had the machine, but they don't. But opportunities will come. So, a couple of cautions here. There's lots of unknowns and everyone's situation is different. I'm not a registered investment advisor. So if you got a lot of money in the markets, probably want to talk to one. But be aware that many of these people are compensated by what they tell you to do, and they get paid by you moving money around, which means they've got a conflict of interest. Surprise, surprise. So be careful who you hire, and in short, think about what you're going to do before you act. But do the thinking now, because everything changes on December 31st. Even if they pass some kind of a deal, you're still going to see major changes. Today, we know what taxes are. You know what tax rates are. Unless you live in California. Proposition 30. I didn't realize this. That tax change is retroactive to January 1st of this year. Yeah. By the way, that's a 50% increase in the top marginal tax rate. So if you live in California, thank God none of us do, you just got screwed with absolutely no way out of it.
So the voters reached out and stole.
The voters stole out of their own pockets. And you want to talk about stupid. They passed a retroactive tax increase on themselves. I'm stunned that they actually did this. How do you plan for a retroactive tax increase? You don't. All right, but tomorrow taxes are unknown, but they are almost certainly going to be higher than they are today. So what this means is you want to be thinking about taking taxable investment losses now. Why? Because you can bank them. They're a loss carry forward, they go on your taxes, they never expire, and you can use them against gains in future years. This is very useful because you would otherwise pay taxes on those gains at a much higher rate. So essentially you can lock in today's capital gains tax rate by taking a capital loss today that you can't otherwise deduct. It's kind of a cute trick. One of the few things that is almost guaranteed to work. Of course, Congress could change the law. All right? So you don't know what they're going to do. But this is one that they probably won't touch. The other thing is consider taking taxable gains now for the same reason. You know what the rate is today. You don't know what it's going to be next year. Okay? And it will probably be higher. And oh, by the way, if you are a high dividend investor because you like to live on dividend income, you're really going to get hammered. If you think that the dividend rate is going to stay where it is now, you're out of your mind. It's not. It's going up. Back during Clinton's presidency, they were taxed the same as ordinary income. I don't think it'll be that bad, but it could happen. If everything expires, by the way, it will be. So, one would hope that they don't go that far. That would potentially mean going from 15% to 39.6. Hello, whammy, whammy. That's going to make dividends a real problem. So, everybody wants to talk about gold, everyone wants to talk about inflation, deflation. Look, if you believe that very high inflation is coming, outrunning it is likely to be impossible in the markets. This is the lesson of Jimmy Carter. Okay? Everybody had a scheme that they were going to find some way to get around this problem when Jimmy Carter was president and inflation went nuts. Guess what? The only way you won when Jimmy Carter was president, and right after he got out, thrown out, be a better word for it, I suppose, was if you bought the long bond when it was at ridiculous interest rates and then it collapsed. And you got to make an insane amount of money on treasury bonds, in some cases for the next 30 years, as rates fell, and it was fantastic. Now you had to pay tax on the interest income, but it was the best bet in the world at that particular point in time. And not one person in 1,000 did it. By the way, I wasn't one of the people that did it. All right, but this is just to illustrate that the conventional wisdom is almost always wrong, because very nearly nobody did this. Everyone thought that rates would continue to be high and your bonds would continue to be worth less and less and less, and of course that's not what ended up happening. If the government's attempt to reignite animal spirits, however, fails, then you're going to see tremendous opportunity with people with cash, because the price of assets is going to fall dramatically. What is dramatically? 50% or more in the stock market? Maybe another 50% off houses? Maybe more than that? Bottom line is that the government cannot tax sweat, which means that your best investment is in what you know. It is not what you buy, it is in what you know, because they can't take something from you until you turn it into something tangible. What's in your head is not taxable, thank God. Key concept when you're looking at investments and what you want to do: only after-tax purchasing power matters. This gets a whole lot more complicated when you don't know what the tax rates are going to be. And this is one of the things that makes it very hard to figure out what to do from an investing perspective right now, because you do not know what the investment landscape is going to look like, and by the time you find out, it's too late to make a change. It's very difficult to find attractive investments when policy is unknown. And this is one of the challenges that I have right now as an individual trader. It's one that everybody else has. But the one key takeaway from this is that duration, that is, things that are locked in that you cannot change easily and quickly, and illiquidity, in other words, something you can't sell and get for right now if something goes wrong, are death in an environment like this, because you never know which way policy is going to go. If you like roulette, and that's what you're doing if you have duration or liquidity risk within your portfolio, just go to Vegas. The roulette wheel is fantastic. You can put it all on red, take a spin, it's 50-50. You're either rich or you're broke. I frankly don't like those kinds of odds, so I take duration risk and liquidity risk out of the portfolio. That's me. Two ugly facts. Just to restate this, folks, because this is the most important aspect of things as things stand right now. Within the next 6 to 8 years, we're going to hit a mathematical wall with medical spending within the government. Obamacare is both parties' attempt to cheat on that. And anyone that thinks that the Republicans are not completely on board with this is out of their mind. The only way to solve this problem is to pull the monopoly protections out from the medical industry. And neither party has even talked about doing it, which tells you exactly what they think about the idea. It's flatly impossible for everyone 50 and older to enjoy what they were promised unless you die within the next 5 to 7 years. That's just the way it is.
What are those, go back to the,
Yeah.
what are those monopoly protections they have now?
Oh, good Lord. Just give you one example. In 30-some states, there are laws called con laws, certificate of need laws.
Right.
Florida is not one of these states, by the way. If you want to open up an MRI center, a hospital, a surgical center, or whatever, you have to ask for permission and get a license to open that center up. And the people who sit on that board are the people that own the current MRI machines. So if you tell them you're going to come in there and you're going to scan people's knees for $200 and they're currently charging $2 grand, what do you think the odds are that you're going to get a license? Zero. That's right. Another example of this, pharmaceutical protections. Viagra is $2 a pill in Canada, it's 20 bucks a pill here. Go to Canada, buy a trunk full of it, come back across the border, go straight to prison. Why? Because the pharmaceutical industry made that illegal. Why did they make it illegal? So they can maintain a monopoly price in the United States. We pay for the development of every advanced drug, device, and medical technology that the world uses for free. 300 million people cover the cost of development. 5 billion people get the benefit. That's the reality. If we were to get rid of that, the market would fix 75% of this. You'd see the cost of medical care come down by 3/4. And if you don't believe this, Look up a place online, get out your computer, Google up Oklahoma Surgical Center. Just go Google it up and take a look at the procedures. You can go get a hernia repaired for a couple of $1,000s up there. The problem is, you got to pay cash. Now guess what your insurance company would charge for the same procedure, what they'd get billed. 10, 15 grand, all right? Knee surgery, back surgery, you name it. It's a whole menu of procedures right there, and about a fifth on average of what I see reimbursement rates from the major medical companies everywhere else. So if we solved this problem, that's what would happen in the medical industry. The reason it's not done is because there's an awful lot of people making an awful lot of money that would stop. We'd have a short-term economic depression that would be recognized. About 8 to 10% of GDP would come out of the economy immediately the day it happened. And then over time, those jobs would go somewhere else other than medical care, and salaries would come down. But the short-term disruption would be massive, and those people have a lot of money and they bribe Congress. And that's why it doesn't get fixed. So, some realistic projections. The good news is Barack Obama's in office for the next 4 years. I know you think I'm crazy, I just said that. You know why? The guy who's in the left seat when the plane crashes always gets blamed. All right? So, before 2016, it is my opinion that the market is going to force a solution, and it may happen as early as the next few months. So for those people who think that this game that they've been playing is going to go on for another 10 or 15 years, the math says no, it's not. And my guess is that this starts in Europe and ends up being fed back into the United States, because Greece is not the issue, Spain and France are, and nobody's talking about exactly how bad that really is. The next few months of economic data are going to be bad. Not only do we have just the reaction from the tax incentives that are coming. By the way, has anybody been paying attention to the layoff announcements that have come out in the last 4 or 5 days? It's absolutely massive. All of a sudden, all these people are getting fired. Gee, I wonder why. It wouldn't have anything to do with this new tax that's going to show up at the beginning of the year with healthcare, right? Yeah. It's not just that, it's also the impact from Sandy. The GDP impact on Sandy is probably going to be about 0.5%, between 1/4 and 0.5% all on itself in the fourth quarter. So when you look at that and then you add to that the changes in employment, the next several months are going to be really bad news. And by the way, the government is going to do the wrong thing for as long as it's able to do so. And it will be able to do so for a while yet. So do not expect them to do anything intelligent, because they certainly haven't up until now. So plan and prepare to be okay if you lose your job and cannot find another one at more than half of what you make right now. That's a pretty rough prescription for an awful lot of people, but that's what you need to be prepared for. All subsidized medical care gets cut off. All gone. Especially anything that the government's involved in. Stock market crashes by 50% or more. By the way, it's more likely to just kind of grind its way lower. This is the lesson of Japan. If you look at the Nikkei was trading at 40,000 20 years ago. Today, trades at about 8,600. Never went back to 40,000, but it didn't collapse and then just flatline. It just kind of ground lower and lower and lower. And there were a lot of times that it made new highs and people thought, oh, things are going back to the way they were, and bought into it, and then they got creamed again. Interestingly enough, their market and our market at the time of the 2008 crash were pretty close together in terms of actual index levels between the Dow and the Nikkei. But the Dow is back over 13,000. The Nikkei is in the 8s. There's a lesson in here. And by the way, the Chinese market is not very far off the bottom where it was in 2009 either. So global markets have disconnected from each other. This is a very important paradigm shift that people are not paying attention to, but they should. Interest rates are probably going to decline further, because when markets go down, people go into government bonds, which is exactly the wrong thing to do, because you're taking on duration risk. That's that poison thing I was talking about. And then they're going to spike, because Congress is not going to do the right thing until the market makes them. And expect taxes to double across the board. If they don't, you did well. If they do, you need to survive it. Yeah?
You probably won't answer this, but are you recommending getting out of the market?
I can't answer that because everything depends upon your individual situation and tolerance. But what I'm saying is that the last line is really the important one, which is that all of these projections could prove to be optimistic.
So if you got out of the market, where would you put your money?
Well, this is one of the problems, is that there's not a lot that looks attractive right now. Okay, this is one of the biggest challenges that everybody has. I mean, I've got it, everyone else has it that's in the market today. Yeah?
How long do you think it will be before the dollar completely collapses?
It won't.
You don't think it will?
No.
It won't get the value like in the Weimar Republic?
No. It's legally impossible today for that to happen. That doesn't mean Congress can't change the law. However, if they do, you've just been told that it's going to occur. So you'll get warning. It cannot happen as the dollar is currently constituted. What happened in Weimar is impossible. The reason is that our currency is debt-backed. That means that for every dollar that gets emitted into the economy, somebody has to buy the debt. This is why the Federal Reserve is doing quantitative easing. Quantitative easing is not about helping the economy. It is not about helping you. It is not about helping keep interest rates down. If you look at the facts, interest rates have actually gone up every time the Fed has done more quantitative easing instead of down. So why is the Fed doing it? Because the banks wrote a bunch of fraudulent credit between themselves to cover the margin on all of their hinky derivative deals. And that credit is coming out of the system. The federal government has taken all of that debt onto themselves. $5 trillion approximately has come out of the intrabank credit between banks, none of which ever went into the real economy, none of which ever made a single dollar worth of product, service, or anything else for anyone in this room or anyone else in the United States. The banks were all going to collapse as a consequence of having that leverage on. The federal government took $5 trillion worth of credit themselves, spent it into the economy, literally giving it away, and all of that went back in to fill those holes in the balance sheets. This is why the economy is not recovered. This is why the price of gasoline has doubled. This is why the price of food has gone up. This is why your personal economic situation is deteriorated. Your government bailed out people, not to the tune of $700 billion that was all paid back. This is the Tim Geithner lie. Your government took the bogus credit that was issued between financial institutions and made it your debt. They forced you to eat it. And that is why we're here. The Fed Z1 has all of this data in it. It cannot be argued with. They are numerical facts. And no politician on either side of the aisle will talk about this for 15 seconds. Because if they do, the pitchforks are going to come out. And they know it. So that's basically the deal, folks. And if you want more information, you can find it at market-ticker.org. I usually write 3 or 4 articles a day. There's all kinds of fun stuff there. When there's economic data releases, I tend to tear them apart within a few minutes of them showing up. The employment report is always one of my favorites because the lie machine comes out in full force every time we get a jobs number. But there's other good ones too that are in there. One of the better lie factories that you'll see all the time is the consumer credit report. Consumer credit is, of course, your ability to take on the promise to pay with your ability to go to work tomorrow. The only place that that's been advancing in any substance is student loans for the last 3 or 4 years. So our kids are getting screwed, basically, with worthless degrees. They can't get jobs. They take on tens of thousands of dollars of debt. The universities are more than happy to jack up their tuition 10, 15, 20% a year. And that is one of the things that's floating all the BS that's going on in the economy right now. So the numbers are all there, folks, but you have to go look for them. Interestingly enough, they don't actually bother to try to hide the lies. They don't have to. Nobody will talk about this in the media. You just don't see it. But it's all right there. The government publishes all this data. You just have to look. So, questions?
Carl,
yeah.
You talked about the tax rates are going to go up.
Absolutely.
Is that going to be a feel-good thing, or can you've seen the numbers, you've done the crunching. Do you actually get revenue increase by raising taxes on people?
Yes and no. Okay? There's the argument that when you cut taxes, economic activity expands and therefore you get more revenue into the government. This is, this is the Bush meme that was run during his presidency, okay? It was also run by Ronald Reagan. You have to remember something though. Ronald Reagan made a deal with Tip O'Neill that he would allow taxes to go up, but for every dollar in taxes he was going to get more than $1 in spending reductions. He never got the spending reductions. Okay? So the problem is that the government has found a very convenient scam to present a false view of the economy. And that is by continually running fiscal deficits, they can make it look as though the economy is expanding when it really is not. But what's happening is that they are taxing wealth by doing this. When the government runs a deficit, it is exactly the same mathematically as if they raised your taxes. It makes no difference which they do from an economics perspective. Now you won't hear people talk about this because, again, the public would not put up with it if they did. Okay? But a tax increase is very visible to you. A $1.2 trillion deficit, you don't see. All right? If the IRS showed up at your door and said, give me 8% of everything you have, everything, every dollar you have, every dollar in the stock market, every dollar in your wallet, everything. 8% of every transaction you engage in tomorrow. When you go to the store and you buy your groceries, you buy $100 worth of groceries, $8 to the IRS. You go nuts. But that's what we've been doing for 4 years straight. 8 to 12% every year for the last 4 years. That's why we're in this mess. But it's done by subterfuge because, again, if they were to actually show up and do that, you'd go crazy. All right? So they run the deficits and everybody says, oh, well, this is just temporary until the economy Sorry, guys, it's a tax increase. It's the same thing. Yeah?
Is the Laffer curve for real?
No. And here's why. The Laffer curve says that if tax rates were zero, the government would have infinite revenue. That obviously can't be the case, right?
Well, actually, I thought it was kind of a...
Well, there's an economic theory that says...
You got an optimal point out there somewhere.
Right. There's economic theory that says there's an optimal point for tax revenue. The real problem is that taxes... There is a group of people that believes that taxing people is how you give the currency legitimacy. In other words, it doesn't actually serve an economic purpose to raise money for the government. It simply forces you to use dollars as a medium of money because you have to pay your taxes in something, right? And the government says you have to pay them in dollars, so therefore you have to use dollars. You can't use pieces of silver or bushels of wheat or, oranges, all right? Sorry, folks, I don't subscribe to that because the government can only do one thing. It can take money from you and give it to someone else. That's all the government does. It redistributes from one place to another. And we all agree that there are certain things we want the government to do. Okay? I would like to have a national defense because quite frankly, the idea that somebody would just kind of show up with some planes and some ships and some tanks and say, by the way, this is our country now, no thank you. All right? But the question is always, what services do you want the government to provide and what are you willing to pay for them in current taxes? And if the discussion is forced into that framework, then we find a government that fits within A, the Constitution, and B, what we're willing to pay for. The problem is we have allowed our legislators to say, you can have it today and you can pay for it never. We're doing the wimpy thing from Popeye. The problem is that eventually Tuesday comes and we still don't have the money. So, yeah.
All that presumes, and it seems reasonable, that they're going to have to do more or less what they've always done. If you equate borrowing and taxes, they're going to have to inflate their way out of it. That's how you make every dollar worthless.
You can't inflate your way out of it because every time that you do this, look at what's happened over the last 4 years, okay? The price of a gallon of milk has gone up about 50%. The price of a gallon of gasoline has approximately doubled. All of the things that you cannot change the economic welfare of the public by changing the denominator. If you have 10,000 units of production in the economy and 10,000 units of credit and currency, and I wave a magic wand or push a button on a computer, and make there be 20,000 units of credit and currency, I now need 2 units of credit or currency to buy 1 unit of output.
I don't mean inflate the economy, I mean inflation.
But it's the same thing. It kills it. Look, inflation simply takes your purchasing power and substitutes that for what you were going to do, what you were going to call taxes. Isn't it the same thing? If I start with $100 and you double the price of everything, I only have the same purchasing power that I had if I had previously had $50.
Right.
All right. Well, that's what they're doing.
Right.
Okay. So how do you get out of the box by doing this? If you continue to press this issue far enough, everyone starves.
Well, how, in QE2, how did they print $700 billion and essentially buy their own debt?
What they did was they put an 8% tax on every single unit of activity within the economy over the last year. The fiscal deficit is identical economically to a tax.
But outwardly, they appear to
Of course,
have gotten away with essentially printing money to buy their own debt.
they didn't get away with anything. They took away your purchasing power. It's exactly the same thing as if the IRS agent showed up and said, "Give me 8% of everything you have. All your money in your wallet, give me 8% of it right now. All your money in your bank account, give me 8%. Every time you go to the store, 8%."
That's true, but nobody's blaming the incumbent politicians.
I understand that, but the economic facts are that that's what's happening. Okay? So can this go on for some period of time? Sure, but eventually everybody in this room starves. Now we all starve at different rates because we run out of money at different speeds. Okay? But eventually we all starve. At some point this entire model of let's lie about things breaks down. And what I am saying is that from a mathematical perspective, the growth rates, where the big growth rates are, is in medical spending. And the second problem that we have is defense and energy. But I left that one out of this because if we don't fix the first one, the second one doesn't make any difference. All right, 9% growth a year. Divide into 72, guys. It's the old banker's rule, the rule of 72. Divide the compounded growth rate into 72, it tells you how many years it takes to double. It's every 8 years. Okay, so every 8 years, so in 8 years we go from $850 billion to $1,700 billion, $1.7 trillion. That's more than half of the federal budget on medical spending alone, Medicare and Medicaid, within the next 8 years. That's not going to happen. There isn't that much money. The government doesn't have it. That happens, and they can't pay Social Security anymore because they don't have any ability to do it. So this is why the wall gets hit. This is why the forcing function is there, and we're going to have to deal with this. Yeah?
What about like government pensions, like my dad's on like a pension and all that? What
Well, that's even worse. That's the compounded, the pension systems within this country, within the public sector, are an outright scam. They assume 8% average annual returns. That can only happen when credit is expanding, as you saw in that first chart. Okay? But those returns are not real. We're borrowing them. When you get to the point that credit can't expand anymore, it's impossible to make 8%. What does a savings account make now? 0, basically, right? What is a 10-year bond return? 1.7. That's a safe return. A pension fund has to be in 30-year money because the average person that retires lives for 30 more years. All right? So when you put that in there, you look at that and you say, but 30-year bonds only yield 3%. Well, how do I get 8? All right? Well, I'll tell you how they get 8. They invest with hedge funds. They put some of it in the stock market. And what happens when the stock market crashes? Or when the hedge fund makes a bad bet and loses all their money? All right, now they don't have any money to pay the pensions because they didn't put the money into safe assets. There is no possible way to maintain an 8% rate within these compounded rate of returns. The reason they use that number is because if they told the truth, which is somewhere around 4 in today's environment with the ZERP thing, the amount of money that the employers, including governments, would have to contribute into those pension funds would triple. And they don't have the budget to do that. Now, by the way, if you're wondering where that comes from at the state and local level, your property taxes is the answer. So guess what that means is likely to happen to those? That's not good news either. When I say taxes are going up, I really do mean it. I mean, these are the mathematical numbers that go behind all this.
should someone do this? retired, I mean, like, already retired.
Well, they'll try to pay it, but there's no guarantee they're going to be able to. I mean, you know, the argument I keep hearing from people in that situation is, well, the Constitution of the state of Florida says that they have to pay this in front of everything else. And my answer is, it's a lot easier to pass a constitutional amendment than to make money appear out of thin air.
I'm thinking like federal government type stuff.
Well, that too.
That's what I
Okay.
mean. So would they,
Well, but the problem's the same. It's just where the issue is. Although federal pensions are actually a little safer than the state ones, simply because of the way they're structured. But you have to watch it, because Geithner has played funny games. When they hit the debt ceiling, he steals the money temporarily out of the TSP. Those of you that have money in the TSP plans, I don't know if you know that you've been unwittingly borrowed from without your explicit permission. That's part of the deal for participating in the TSP, is that he can temporarily use your money if he needs to. You better hope he's able to put it back.
Which is why John Corzine thought he could do it at MF Global, because he used to be in the Senate.
Hey, you know, John Corzine, yeah, you know, there are questions about why that guy's still walking around free, you know. I guess, you know, I guess if you rob a 7-Eleven and, you know, you rip off $50, you go to prison, but if you steal $1 billion, it's not that big a deal.
There's a movie called Never Steal Anything Small.
Well, there you go. Yeah, the bigger the theft, the less likely you are to get imprisoned for it, I suppose. Yep. So.
What's your forecast of social unrest as a result of all this? What do you think?
Around here, I don't think we've got a big problem.
Nationally.
Oh, I don't want to be in Atlanta. I don't want to be in Chicago. I don't want to be in New York. I don't want to be in Detroit. I certainly don't want to be in Los Angeles. I mean, you know, the problem at the end of the day is that when the promises that are made are not fulfilled, things tend to get a little dicey. But the biggest predictor of riots is hungry bellies. And so the big time civil unrest problems don't come until people start to go hungry. Then there's trouble. Whether we'll get there or not is an open question. I don't know if the government is dumb enough to let things deteriorate to that level, but you know, well, it's like I said, you know, you could, if there are two things the government could do, one of them is right and one's wrong. If you put your money on wrong, you'll be right most of the time. So, yeah.
Some people are asking what is TSP?
TSP is the Thrift Savings Plan. It's offered to federal employees. It is particularly relevant to military members because they have it available to them as well.
You're talking about active duty military?
It's well, it's available to people in civil service as well. So, but it's basically it's kind of like a 401. It's kind of like a 401k sort of, but it has very limited choices. You only have 3 or 4 different options. And one of them is kind of cute. It's the G Fund, which is government treasury securities. But somehow they magically managed to give you more as an interest rate percentage than you could get by buying the bonds in the open market. So there's some really kind of weird, hinky things going on within how that plan works internally. But part of the deal is that anything you have in there, the Treasury can appropriate for short periods of time. They can't keep it, at least theoretically. But that's how they got past the debt ceiling limit the last time around, was they literally grabbed the money out of there.
Well, they moved it about 3 months, didn't they?
Yeah, it allowed him, well, it wasn't just that he grabbed, but yeah, he grabbed that, he grabbed a bunch of other, there's a bunch of money that is not really treasuries, but they're hanging on to it for other people, and they tapped it. So, yes?
You've told us what's probably going to happen and given us some scenarios, but what can the ordinary person do to try to protect themselves? I mean, do you want to take your money out of the bank and put it under your mattress?
Well-
Do you want to buy commodities?
Well, let me give you a couple of worst case scenarios, okay? At the point that the FDIC no longer is able to guarantee that your $250,000 is still there, the last thing you care about is money. At that point, tubular steel and lead are probably the most important commodities to own, not gold. Guns and bullets. I don't believe that things would deteriorate to that level for a number of reasons. In point of fact, the way the FDIC's enabling law is structured, it's called prompt corrective action, section 1831.0, United States Code. the FDIC should never lose a penny. Now, of course, we know that that's not what really happens. They come out with these bank closing reports on Fridays and they say that the cost of the deposit insurance fund is this many millions of dollars. That's because the FDIC is breaking the law. Prompt corrective action says that the FDIC is required to close these institutions before they go into a negative equity position and can't pay everybody off at 100 cents on the dollar that has deposit money out there. So there should never be a loss to the FDIC deposit insurance fund. Now, people say, well, why do we need the FDIC if that's the case? And the answer is because the government cheats, and if you need evidence of this, all you have to do is look at the reports every Friday when they close banks. Okay? Since you can't count on the government to do the right thing, you can't leave people to fend for themselves. All right? But I don't believe that money within FDIC limits will be lost. I can't necessarily say the same thing about money in an investment account because the SIPC, which is the Investment Protection Fund, is actually not government backed. That is a private investment fund funded by the investment industry. The reality is you'd have to have a number of very large brokerage failures where fraud was involved before those funds were implicated and you got in trouble there. But it is theoretically possible for it to happen. Then there are those institutions that are not covered by it. Hello, MF Global again. But in general, what I would say is that within FDIC limits, if things get that bad, I'm not worried about economics anymore, okay? Beyond FDIC limits, if the federal government cannot pay what is in Treasury Direct accounts, you can buy Treasury bills directly with the United States Treasury. If the federal government is unable to pay those amounts out, then again, I don't think you care about economics anymore, okay? Because at that point, the federal government has failed, literally. It is gone. In that kind of situation, I'm just not concerned about investments. All right? I don't think things will get that bad. There are people that do. All right? I don't happen to be one of them. I don't think it's going to get that bad. I think what you're going to see is the kind of reversion back to the mean in the equity markets, in the bond markets. You're going to see a lot of pension funds, private pension funds in particular, are going to go bankrupt. The result will be the Pension Guarantee Fund will have to take them over, PBGC, which is a government program, but they will only pay what is in those funds. So if you have a private pension, you could get 10 or 20% of what you supposedly think you're going to get. And if you think that can't happen, go talk to the airline pilots that had it happen to them. Because yes, it can, yes, it has, and yes, it will. Okay? So this is why I put forward some of the scenarios I did and said, figure out how you're going to live on half of what you make now. All right? Because that's a realistic scenario for where this thing ends up before it unwinds. But that's, you know, I mean, Mad Max kind of stuff I just don't see happening. I mean, sure, it's possible, but I don't think it's going to. Yeah.
If you do lose 50% of your income, the economy cost, you know, for instance, if you buy a loaf of bread,
right,
it's not going to go down equal to that 50% of your loss of income.
No.
It's probably going to go up another 50%.
No, it will go down some. And more importantly, hard assets will get very cheap. This is one of the reasons that having capital available is always wise, no matter what the economic situation is. Just a personal example, in the early 1990s we had a recession. How many people remember it? It's a pretty decent one. It's fairly deep, sharp, short, but it was nasty, okay? I set up an internet company during that time. I was able to buy nearly $1 million worth of computer equipment for 40 grand. Why? Because someone needed to sell it really bad. And I had $40,000. But there was no credit at any price. I couldn't get a loan. I talked to the bank. They told me to go away. All right? Nobody would lend me 1 cent. But I had cash. So these kinds of opportunities come up. It wasn't all that long ago down in the Naples area where you could buy houses that had sold for $400,000 and $500,000 a few years earlier during the height of the bubble for 30 and 40 grand. Now the problem was 9 out of 10 of them, somebody had flushed a bag of cement down the toilet on their way out the door and the house was worth zero because the plumbing was destroyed. All right? But if you were there and able to inspect them and figure out which ones were actually worth buying for $30,000 or $40,000, you could turn around and buy that, and even if you could only rent it for $400 or $500 a month, you can make a fortune doing that kind of stuff. But again, dislocations bring opportunities, but this is why you have to have flexibility. It's one of the reasons that I hit on the point that I did, which is what you have in your head can't be taxed until you turn it into something usable. All right? So everybody has a different set of skills. Figure out what yours are. Figure out how you can capitalize on other people's misfortune. If you think you can buy up an asset that will make money, that will turn into something productive, when the opportunity see it for sale, offer half of what he's asking. If he really needs to sell it, you'll get it. All right? And if he says no, time isn't right yet. But those opportunities do come up. They happen all the time. All right? It's a matter of being positioned for it. But the key is, don't be in debt, don't have leverage, don't have duration, don't be illiquid. You have to be able to move and be flexible with what's going on. Yeah.
Again, is gold and silver worth keeping in the bank, or would you just
Here's the way
continue to go with the dollar?
Well, here's the thing I caution on gold and silver. Gold and silver today are traded electronically. Okay? What you see as the price for gold and silver is not the price for a physical bar of gold. It happens to also be what you will pay for one if you go down to the store and want one at one of the shops. But the price is not set that way. The price is set the same way the price is set on a barrel of oil. The last barrel of oil you want to burn today sets the price for every barrel of oil that gets consumed in today's market. The same thing's true with gold, the same thing's true with silver, and an awful lot of what is traded has absolutely nothing to do with a physical commodity. They have all become financialized. So what is the actual value in dollar equivalents of 1 ounce of gold? I have absolutely no idea. All right? I don't know if $1,750 is a reasonable price. I don't know if $175 is a reasonable price. I have no way to know. Because I have all of these financial contracts that are out there, and I know full well that there is more out there today in financial contracts against this asset than there is physical asset to cover it. Which means that when the margin calls and the runs start, there is no guarantee the price is going up. It may very well go down a lot. So what are you carrying it for? Is there a purpose in it? For example, you know, a lot of people look at that and they say, well, but what happens if the price of gold goes to, $300 again? I say, well, do you really care? What if the price of gasoline is 30 cents a gallon? You've protected your purchasing power, right? You didn't protect the number of dollars you'd get, but you protected your purchasing power. So what is the purpose that you're actually trying to accomplish? And then what do you believe is going to happen? I cannot predict the future with accuracy. All I know is that the odds of a dollar collapse a la Weimar Germany would require change in the law, and is extremely unlikely without that change in the law. If Congress passes a law that says that they can, let's put it this way, if you go to your mailbox tomorrow and there's a $500,000 check in there from the government, from the Treasury of the United States, because Congress passed a law that says they're going to send everybody 500 grand, all right? Just sell everything and turn it all into land and seeds and tractors and cars and physical things, because the currency is about to become worthless. All right? But the law has to be changed for that to happen. Yeah?
Things appreciate and depreciate relative to each other. Are there
That's right.
any either overseas equities markets or foreign currencies that you think would hold up well even if things in the United States don't go so well?
The one place that historically has always managed to keep their act together is Switzerland. Okay? But it has gotten very difficult to physically transact as a United States citizen outside the country. Most foreign institutions will not deal with you as a U.S. citizen anymore because of the IRS and the reporting requirements. If you're buying financial contracts in the futures market or in the foreign currency market, you are now believing that the company you're dealing with here in the United States isn't going to go bankrupt and steal all your money. All right? I mean, the whole point of asset protection is exactly that. All right? And by the way, Mr. McAfee, everybody hear about this? They're looking for him now. They think he committed a murder down in Belize. All right. There's a lesson in here because he's one of those guys that decided, I'm getting the H out of the United States. All right. And there are multiple reports that basically the local gendarme decided that he was a milk cow. And that bribery was the order of the day down there, and since he was the gringo, he was going to pay them. And I don't know if he's battier than a than a schoolhouse rat. I don't have any idea. But that kind of stuff's been floating around for several years. So, you know, a lot of people say, well, I'll just go get another passport and I'll move to blah, right, wherever that is. There are no 100% safe bets. So what you want to do is hedge, accept the fact that there is the possibility that some of what you have may go away. The goal is not to end up on the street, okay? And to be able to take advantage of opportunities as they come, because you're never going to make all correct investment decisions. Some of them are going to be wrong. I've made plenty of bad ones. Right? The whole trick is don't end up putting everything on red and end up with zero. And if you bet all in one direction, you're always taking that risk. Anything else? Any other ideas? All right. Thank you very much. Much appreciated.